futures edging lower this morning. Investors are waiting on more earnings. We are expecting a lower opening for the Dow, down 28. NASDAQ and S&P down just a fraction. We're also watching the bond market. The yield on the 10-year hitting 2.99%. That is the highest level since January 2014. Joining us right now is Belpointe Chief Strategist David Nelson. David, good to see you. Thanks so much for joining us. What worries you more, the move toward 3% or the earnings story?
The earnings story only in the sense that the expectations were just so high coming into this. You know, just before this earnings started, J.P. Morgan was one of the first to report. I looked at an estimate chart, and they had literally gone parabolic going into the earnings. So expectations are high, and so far what I've seen, the earnings have been fine. The bigger problem in earnings season this time around is technology. And I saw your interview with Dan Niles, and he hit on a couple of important points. Yeah,
let's do that right now. Let's see what Dan Niles said about technology. He had a real problem with Apple and Google parent Alphabet. Here's Dan Niles this weekend. You also think Apple is going to have a miss when it reports?
Yeah, I do.
So Apple reports in May. Watch for that. Dan thinks they're going to miss on the numbers. Google parent Alphabet, you also think may miss?
Yeah, I think that one, though, I like, quite a bit over the longer term. I think the problem with Google is the exact opposite as with Facebook. With Facebook, they guided expenses up 45 to 60% this year before this data breach stuff ever happened. When you look at Google, they have expenses modeled for some reason. Wall Street does. Google doesn't guide. But Wall Street has expenses modeled to go up by the slowest pace in the last 5 years. And I think the expenses are actually going to be a bit higher. I think the revenues will be fine, but I think you're going to have a problem on the margin front, which is why I think the EPS is going to have an issue. But that's one of those stocks that after that, I think is in really good shape going forward.
I guess the question becomes, if Apple and Google, parent Alphabet, miss, does that create a reason to sell and sort of lead this market down and earnings worried?
It's pretty difficult to have a bull market without tech in the lead. It's just not in the script. This is a missed product cycle for Apple. I thought the iPhone 10 was a disappointment. I have an iPhone 7. I saw no need to switch. The bigger issue for technology isn't even Apple. It's really Washington. Make no mistake, what you saw with Facebook and Cambridge Analytica, that was the earth moving under our feet. Regulation is coming to technology, and that means changed business models. Mark Zuckerberg is inviting it, and as that changed business models take place, and you give consumers the ability to opt out of some or all of part of their data, then that data is just simply worth less, and that translates to other companies as well, Google and others.
Yeah, that's what we were saying earlier, Mike.
Yeah, so, David, so I agree. You don't want to fight Washington when you're owning a company. You don't want them like Facebook fighting Washington. But this could lead. I see this as a potential opportunity for the Facebooks and Alphabets and Apples of the world to start monetizing some of the data, to actually charge consumers for the data, because it's not as if you're going to have a mass exodus away from
They're going to charge
Google.
Consumers for their data. How about consumers charging Facebook to use the data? That's another model that could go out there.
I don't know how they would.
I don't know.
You're not going to charge Facebook for something, but Facebook could say, hey, 99 cents per year, 99 cents per quarter, per month.
You mean to not opt in and not have your data used?
Or to have a certain type of your data used.
It's
to have a certain
so
type.
backwards to me that I'm going to pay them to protect my privacy.
You're really paying them to use their service, right? They've been giving it to you for free for years. You've been on it.
I think it's just the opposite, honestly. I feel that they're extracting a lot of data from me. They're making a lot of money off of it.
That's how I feel.
And I think maybe the only other way around for them is if I opt out of my data, then you can charge me to be on that site and a pay-for model. That's something that Sheryl Sandberg has said that she doesn't want to do.
One of the biggest issues is not necessarily Washington, but investors stepping back and saying, have Google and Facebook squeezed as much information out of us as they possibly can, and that they've reached a ceiling in terms of their ad revenue, or the revenue that they can, how fast they can grow their revenue. Google has access to 2 billion active Android mobile devices. And that's where a lot of the data extraction comes from. And that's where a lot of the data that's later used improperly comes from. This is according to one of these, a professor quoted in this Wall Street Journal article. But I think that in terms of some of these ad companies and even though Apple's had a bad product cycle with the iPhone 10, Apple's in a better position privacy-wise, which Tim Cook has been preaching,
that's true,
than a Facebook or a Google at this point. In terms
they're
of
also becoming less iPhone dependent
at
this point, and they're monetizing a lot of their other services. So that's good news for them. It's a missed product cycle. That's cyclical. We'll get over that.
So real quick, the estimates called for profit growth in the S&P 500 of 19% for the first quarter. Are you saying that's too that's
I think
too high?
And we'll probably hit that, maybe even beat that. But the market knows that stocks are discounting that.
So would you sell into markets right now? You want to sell?
No, I'm fully invested, and I'll pick and choose my points. If you're going to try to trade around every wiggle of this market, you're going to find yourself missing the big runs. Unless you have some kind of tactical program to do that for you, avoid that at all costs.
One thing to just real point out quickly, you talk about the overall earnings growth for the S&P 500. If you look at the major tech companies, of the ones reporting this week, Alphabet is expected to have faster growth than that, 20%, but Facebook is only expected to have earnings per share change of not even 5%. Microsoft less than the overall market, Intel less than the overall market. Intel also a single-digit grower in terms of EPS.
And that shows expenses going up at Facebook. That's why margins are contracting.
Yeah, which is what Niles pointed out. David, great to see you.
Thank you.
Thank you so much. David Nelson joining us there.